Hey guys, and welcome back to the Infinite Trading channel. So after testing numerous amounts of trading strategies on my channel, I have finally found the one that gets the highest win rate. This strategy works well in the crypto market and is suitable for day trading. It uses two TradingView indicators, which are of course both free. It also uses a price action technique that aims to find high probability trade entries. So I'm going to show you exactly how to use these strategies in this video, so make sure you stick around to the end and follow the rules I'm about to give you. I will be backtesting the strategy 50 times to prove how well it works in different market conditions. Now, for my backtesting, I'm going to be using the price of Ethereum USD on a 1 hour time frame. Okay, so let's go ahead and get our first indicator into the chart. So we're going to search for Coral Trend Indicator by Lazy Bear. And as you can see, we can select this one right here. So the Coral filter is actually also known as the Coral Trend Indicator, and it's a widely popular tool amongst Forex traders. As the name implies, it is commonly used as a trend filter in combination with other indicators. This indicator is a linear combination of moving averages, all obtained by a triple or higher order exponential smoothing. It comes with a trend indication, which is based on a normalized slope of the plot. When prices move above the filter, short positions are blocked, and vice versa. This basic approach may be refined by further considering the normalized slope. If the slope trend is up, it's long only, whereas a slope trend which is down is short only. If the slope is flat, both long and short scenarios can be considered. Now, if we access the indicator setting, we can see that we've got 4 customization options in the input section. For our strategy, we're going to change the smoothing period from 21 to 25. And now to help make the indicator more visible, we're going to go to the style selection and choose a color that works for you. Now, as we can see, this tool accurately identifies the trend direction. However, we're not going to be using it in a standard way. This technique is very similar to the EMA pullback method. So, for example, for a long signal to be valid, we're going to be waiting for the indicator to turn from red to green. Also, the price action needs to be moving above the indicator. And then it has to create a pullback. Now, once this pullback is formed, we're going to be waiting for the price action to cross and close above the green dots. By the way, the dots have to stay green during the pullback. If one of the dots changes colors to red, then the setup is automatically invalid. Now, if all of these conditions are met, a buy order will be placed at the top close of the candlestick that broke above the green dots. The stop loss will be set at the recent swing low, and the take profit target will be set at 1.5 times the risk. As we can see, this method of trading is really successful. However, we still need to have a double confirmation for our entries. And for that, we need to add the second indicator. So we're going to search for ADX and DI. So the purpose of this indicator is to prevent us from taking these low quality trades. However, you need to know that you will get less trade entries using this method. Now, the good news is we don't have to change any of the inputs for this indicator. We can keep them all on default. Now, whilst we don't have to change any inputs, we do need to change the thickness of the line so that we can see it better. Okay, now the strategy is complete, let's understand how to take a long and short position. Okay, so a long signal is valid only when we have the following conditions met. First, the coral trend indicator is a green color. Second, the price action is moving above it and then it creates the pullback. Now, for the pullback to be valid, the price action must cross and close below the green dots. Also, at least one candlestick must be fully closed above the coral trend indicator before the pullback. Once the pullback has been created, we're going to be waiting for the price action to cross and close above the green dots. Once we have that, we're going to be looking at the ADX indicator for the trade confirmation. So the green line must be above the red line, the blue line must be above the 20 level, and it needs to have an upward slope. If the line is pointing downwards or it's flat, we simply just do not take that trade. In this example, we see all our conditions are met, so we're going to go ahead and enter a long trade. Now our stop loss will be set at the recent swing low, and we're going to be targeting 1.5 times the risk. Okay, let's take a look at one more long example. So here we see the price action is in an uptrend, and this is confirmed by the green dots of the coral trend indicator. We also had a valid pullback where the price crosses and closes below the green dots. And we had plenty of candlesticks that closed above the green dots before the pullback. The market created a bullish candlestick that closed above the green dots, and the ADX is bullish. The blue line is above the 20 level, so we're just going to follow the rules and enter a long trade. Okay, now we can understand how to identify short positions. First, we need to have the dots of the coral trend indicator colored in red. Second, the price action must be moving below them. And third, we need to have a valid pullback where the price crosses and closes above the dots and then crosses back down. Remember, at least one candlestick must be fully closed below the dots before the pullback. Also, the coral trend must stay red at all times during this retraction. Now the ADX indicator must be bearish, which means the red line must be above the green line. The blue line of the ADX indicator must be above the 20 level. So now all of our conditions are met, we can place a sell order on the close of the trigger candlestick. The stop loss will be set at the recent swing high and the profit target at 1.5 times the risk. Okay, so I've just completed the backtesting using the same parameters as the examples, and you don't have to be a genius to see the results for the strategy are just incredible. The win rate across 100 backtests was 73%. Not only that, but our true realized profit was over 223%. And if we look further into the stats, we see the profit factor for the strategy is 5.41, and at our peak we had 9 consecutive wins against just 4 consecutive losses. So with the results, I can't recommend the strategy enough, so go ahead and try it for yourself. Test it out on different time frames, different markets, and play around with fine-tuning some of the settings so they work best for your market. By the way, I thought I'd just add a quick side note in here. The actual results will of course vary depending on markets and market times. I ran this again during a high volatile session on a demo account just to see what would happen, and the results were of course significantly impacted. However, I would never recommend trading in a volatile session for any strategy anyway, so I wasn't too concerned about this. And with that, this trading method is done. If you found the video useful, I'd appreciate it if you could like it and subscribe to the channel. Also, if you guys want me to cover any specific trading methods, comment them down below.